Should I leave my job and start trading? To trade or not to trade? Hey, ladies and gentlemen. Hello, fellow traders. We're live again, and we're gonna get on with it and have a look at what we've got today and what's on the go. Should be fun. Hello, I see you left a message. Where are you, Rob? I'm right here. I haven't gone anywhere. We're still here. Guys, before we get on with it, don't forget the risk. Got to put that up. Most traders do lose money. If you don't like losing money and you don't like risk, yeah, probably shouldn't be trading. That's always an issue with trading. Let's have a look on this account quickly and just see where we are. The US 500 still going up. JAP 225 is going nowhere. Brent crude oil is going up, so that's fine. That looks great. Not much happening there, though. I think there's about 2 trades on here. Yep, one's losing, one's winning, but the winning's a bit bigger than the losing, so that's not too bad. That's okay. Let's have a look down here at the other accounts. The big one you can't get to. I can't see it. This one's hurting me big time on the South African rand. This one is, I took a short trade. I took what you call a long trade. I'm short in the rand. Okay, I took a long trade on the United States dollar, South African rand, because I expected that the rand would be really weak with all the really bad politics in South Africa at the moment. But for some other odd, unknown reason, yeah, it's kind of going the other way. Probably got more to do with the dollar than it has to do with the rand. I don't own oil on this one, but we do have gold, and we do have the euro, Great British pound short. That is short, eh? Yeah, that's short. Okay. What are we going to talk about today? Yeah, interesting. One thing I'm going to talk about a lot today is, should you leave your job and start trading? Should you go full-time? Is it a good idea to go full-time? And if I do go full-time, how much money do I need to go full-time? I'm bringing out a video tomorrow in case you're going to ask the question, how many trades do I need in a day to trade? That's going to be what it's all about. So I'm not going to cover that today. How many trades do I need a day? How many trades do I need in a week? How many trades do I need to trade? That we'll cover in tomorrow's video. Okay, hello Street Cells and Morgan Dog, nice to see you. Good to see you. All right, so normally we start at 2 o'clock, so on my side anyway, 1400 GMT +2. We're just waiting for everybody to come on board because a few people will only get here, on time, 15 minutes after the time, etc. And I know it's difficult for everyone here to get here at this time. I do try on the Tuesdays to make it a little earlier for people on that side of the world, and on Thursdays a little later, so that I can cover most of the people on this side of the world. There's a fine line between getting everyone involved. So yeah, for some people it's really early, others it's really late, and yeah, that's the joys of staying where I stay on the other side of the world. We'll check how the positions are going here. Yeah, like that ZAR trade is really looks like it's going south for no particular good reason, but that's fine. We'll have a look at that in a moment. We'll also have a look at getting in and out of the trades today, and how you get in and out of the trades, and what's the best way to go in and out of the trade. So if you're insane enough to come along on this journey, then come along and let's do it. Don't forget, the charts don't have any predictive capability. Neither do I, for that matter. I don't have a predictive capability. If I did, and I had the ability to tell the future, then I'd have a little caravan on the side of the road, and I'd wear one of those funny little hats, and I'd charge people to come and get their fortune told. But unfortunately, I don't have that ability. Neither do the charts. The charts don't have it either. Everybody thinks that the charts are going to make them money. Everybody thinks that the charts are going to somehow give them some predictive capability in the market. And they don't. They actually don't. They really, really don't. Your money's made in the strategy, as you know. And I always go over the strategy, and the strategy is as simple as it gets. It's just simple risk management. Keep your risk the same and try and make more on your wins than your losses. Now, like for example, on this account, we're taking one seriously shocking loss here with the South African Rand, but the Euro Great British Pound is on the right direction, and gold seems to be in the right direction, but just not very, very strong. Tywell, hello, how's it going? Good to see you, man. Good to see you. Ramfart McGregor, hi everyone, I'm new to the channel and new to trading. Please excuse me if I ask trivial questions. Funny thing about that, there are no real trivial questions. Every question is relevant, and you'll be surprised that as a beginner, as a new trader, you're just starting out, and obviously you won't know all the ins and outs and all the rest of it, and you'll ask questions that you'll be surprised how many seasoned traders won't know that. So don't worry, there are no new questions in trading. And I can tell you something, in the 33 years that I've been trading, I still make mistakes. I still get things wrong. And it's simply because trading is 50-50. Well, the charts are 50-50. When you take a trade, you've got a 50% chance of whether it's going to go your way or go against you, because it's a simple buy and sell. And if you don't believe that, just think for yourself, if everybody was right, the market would be completely inefficient. So if everybody was to buy the S&P today, absolutely everyone, then it would be useless, because everyone would be going in the same direction. And it just wouldn't work, because you wouldn't get anything to buy. You need to buy from someone. So someone's got to have the opposing view for you to be successful. Now, this is where the big thing comes in. The market is 50-50, is when you realize you're not trading against algorithms, you're not trading against lines, you are actually trading against other human beings, or with other human beings. I'm not sure which charting we should use today. Should we use that charting or should we use that charting? Doesn't really matter. Let's have a look at the news quickly. What's going on the news before we get started? June jobs report. I love the jobs report. Don't you guys just love the jobs report? Every week I used to wait for the jobs report, non-farm payrolls, and goodness me. And then the CPI and all the rest of it. And then you get the jobs report on Thursday, you get the jobs report on Friday. And it's really pointless. It's really pointless. It's normally in line with what everybody expected in the first place. And it doesn't really move the markets unless there's a disaster in the world. So when you're looking for fundamentals and news items, try and keep your one eye on massive things like a bank's going bankrupt, or geopolitics, or tariffs and things like that. But as far as jobs figures go, what they're going to do, they're going to come out and you're going to try and predict which way it's going to go. It's going to go long. I'm going to get in there, and it's going to go against you, and then you're going to swap your trade around, try and revenge trade it, try and catch up, and then it's going to go back again and swing around and take your money. So stay out of those kind of news events. They're a little bit volatile for about 5 minutes, and then you'll find that just about on every occasion, it settles back to where it started in the first place. So don't get involved in that sort of stuff. That's a waste of your time. For many years, I used to hang my hat on those little news events, jobs figures, all that sort of stuff. Economists talking rubbish in the market. Investors are all smiles as Liberation Day Part 2 limbs. Stock pickers shine, sniffing out value. Trump aims to shut trade loopholes. China, blah, blah, blah. Nippon Steel. OpenAI condemns Robinhood's AI tokens. Everybody had a big thing about Robinhood and the run on Robinhood and all the rest of it. But I got to tell you guys, just remember, retail traders make up such a tiny part of the market. So you got to ask yourself a couple of questions on these runs. Okay, who's running on these things? U.S. stock futures steady as investors wait. Payrolls data. You see here, waiting payrolls data again. Everyone's waiting for the jobs data. Every week, without fail, we're waiting for the jobs data. Love it to bits. It'll never change. It'll always be the same. It's been the same forever and ever and ever. It never changes. Hello from Kenya. Welcome from Kenya. That's good. I actually bought the US dollars that they are because it broke the trend line Monks, can you please look at one more time and to see what went wrong? Only macroeconomics. You see, the US dollars that I bought it. And I bought it based on, and I didn't recommend it to any of you guys. I didn't even tell anybody I was buying it. I just bought it on this account. And I thought, well, as far as it looked, being in this region, I thought, there's no way the South African rand can get any stronger now, can it? Because the politics are really bad at the moment. But yeah, the rand has got stronger. So in all likelihood, this is probably more a result of the US dollar than anything to do with the rand. And the rand really should be weakening. It shouldn't be strengthening. If I listen to what's going on in the background, and I mean, there's even possibilities of the president of South Africa getting a no confidence vote, rumors and things like that going around. Why would that make the rand stronger? It can't. So, I mean, obviously, if the right person was to take over, whatever the case, but no, this is crazy. So, I clearly took this based on the possibility of it going the other way. Less on the charts and more on the possibility of a move, and I took it above that support, so I've kind of lost all of this. But I'm holding on because I'm still convinced that we might get something good out of it. Why am I changing the time frame? There's no need to do that. I'm still convinced that we might get something out of this. Look, it is bearish. It is now bearish. It's clearly in a bearish trend. There's no other way of looking at it. You have to accept sometimes that things have not gone in your favor, and you have to live with that scenario and just accept it. If I take this out of here now, I'm going to leave that one in because that was a level. But what I'm going to do is I'm just going to draw in this nasty little trend line, which basically says we're pretty bearish. For us to be on the positive side again, this literally has to go up and break through that trend resistance. We're on the wrong side of the trade. End of the day, we're on the wrong side of the trade. I'm letting it play out because there are some politics going on in the background. If I was only looking at the lines and saying it's only the lines that are affecting my trade, then I would, in all likelihood, probably just I'm just refreshing it so I can see the amount here. Then in all likelihood, I would probably get out of the trade here. I'd just let it go. But based on the fact that there are some things going on in the background, I've just kind of hold on to it. Yes, the Great British Pound, Eugene, it did take a hit yesterday. Eh? Where do I have it on here? Let me just... This is the S&P 500. Let's see what we've got in the Great British Pound. Great British Pound US dollar. Nice hit there. Still okay though. Not too bad. Could be worse. The Great British Pound Euro, obviously, that made a nasty turn. Let's just go down to back to SBS 500 and put it back on there. What's going on with XPX 500? It's band 50, 500. There we go. Okay, put that back to where it needs to be. And we'll get to talking about some trades. Hello from Mauritius. Welcome. Is everyone here? I think we've got some people here now. And we can start talking about a few things. And one of the more important things and the more important questions that people ask is, should I leave my job and start trading? And there's a lot of big questions surrounding that. Should I leave my job and start trading? If you've got a business or a job or an income, it's always good to hang on to it until you're absolutely 100% confident that you can trade, that you know how to make a profit and that you are profitable. Don't just dive into this game thinking that you're going to make money if you haven't made any money yet. because not everybody succeeds at it. In fact, most people fail. So what I would say is rather make sure that you are capable of being successful in the market and taking a profit that can sustain you. You know, the thing is, if you look, I've worked for myself most of my life, right? But some people haven't, and some people actually have normal jobs on the side, and they want to do this so that they can get the freedom and what have you. But what you have to remember, if you do take this on as a full-time income, is at the moment you're probably working towards the end of the month because you've got that income coming in and you can pay your bills and so on. You work towards the weekend so you can have some time off and enjoy yourself and all the rest of it. When you're working for yourself, there are no weekends off. And the end of the month comes as a bit of a shock because you have to start paying out. If you have a business, particularly, you have to pay staff. And, well, in this case, you just have to pay your bills, but you have to have made enough money to pay those bills. So what I find the best way to work is, if you're a trader, is I work on an annual basis. So I take enough money for an annual basis and say that money is going to sustain me through the 12 months. And if the 12 months don't work out, you've got to have a plan B for year 2. Because year 2, you're going to need that money as well. You're also going to need to pay your bills in year 2. So you better make some money in year 1. Which is why I say, if you do have a sustainable side income, then I wouldn't throw it away. I wouldn't dump it and then just go headfirst into trading. You can make money out of full-time trading if you have a large cash sum amount or enough to invest. There's a lot of people out there that will tell you, you can just build it up from $1,000 and over time it'll build up and all the rest of it. Here's the thing. You can build an account up from a very small amount if you're not using it as your income. Think about that. So if I take $1,000, $20,000, $100,000, whatever, and I put it into the market and I start working on building it up, whichever way, whether it be with investments in shares, whether it be trading indexes, trading Forex, trading crypto, whatever the case. If I decide now I'm going to take that small amount, I'm going to build it up, but I don't need to use it, then I can actually build it up. And also, if I lose it, I know that, okay, I didn't need to use it. But if I need an amount from that on a regular basis, then what I'm doing is I'm removing my profits from that amount and I'm using them for my personal use, whichever situation. That becomes tricky. And if you have a very small amount, how are you going to build it up from that? Because you need an income. You need to pay for things. So that story is absolute rubbish. It's not going to work, is it? Now, also these funded accounts, I say, okay, you can have a funded account. So what happens is you go on a course, which, I don't give courses, but there are those who do. And they charge for these courses, which teach you that these squiggly lines are going to make you money and that a win rate is somehow going to make you a load of money. And you get involved in this and you start getting involved in that. You've paid for the course, you do a demo and you're successful on the demo and you're all happy. Then you come back to put real money in the market and you find out that it's not as easy as it seemed. So what I found with funded accounts is they're a great sort of in-betweener for you to get your mind around having responsibility for the money that you're putting into the markets. So now you can get a little bit of responsibility that if you have a funded account, that if you lose it or if you lose your instant account or whatever, then you've lost that money and you didn't, that money that you were going to make or whatever the case. So it gives you that insight. It gives you that ability to cross over. But I wouldn't say take a funded account and rely on that for your income. I would be very wary and very cautious of that because I just have this inbuilt lack of trust for these types of things. So while they might give you payouts and you might get, people boast about how many payouts they got and all the rest of it and how much they got, The only way that I can see that you can be a full-time trader making real money is if you have a large amount to invest in the first place and you're using good cash in a proper account. The best way is obviously if you had an investment account over a period of time, but obviously if you can take cash, put it into a proper leveraged account and trade it well, then you can make good profit from that. And the brokers normally don't run off with your money, and you can take your own profits when you want to. So that's the best way to go about it. But I would say go through the prop firm thing first so that you can get a bit of experience and understand whether you can make the money with real money or not. Gives you that ability, to take some responsibility, moves your psychology into the real thing before taking large sums of cash from your pension fund and throwing it at the market. Okay. Great. Welcome from Mauritius. Hi, Blue Mango. Best to have some sort of income like a dividend portfolio so that your livelihood is not dependent on trading. As Nick says, look, in my case, it's very easy for me to sit here and preach to you about trading and carry on. But I have an investment account that I opened many, many years ago, and that's what sustains me at the end of the day. That's my backup. My backup is that investment account, and it pays me dividends, and it makes it grows, and so on. And it's all a bunch of shares, okay, all over the world, by the way, not just in one place. So yeah, that is something if you can, but you've got to have had that. You've got to start somewhere. So, if you're a bit younger, I don't say young, I mean, you can be 40 and still do well. But if you've had money in investments accounts for more than 20 years, then you'll be okay. You've got that backing. Obviously, if you've only just started investing, you're not going to make much money out of it. If you do have a large sum of money, a large sum to invest, like pension fund or something like that, then rather than taking the whole lump sum and trying to trade it, you have to understand the best way to make money is with time in the market, not timing the market. So the best way would be to take the majority of it and invest it. And if you invest it in a number of shares, that's fine, and then you get the dividends from it and whatnot, and you're just going to leave it there. Just don't sell, don't touch it, don't take losses, don't panic, leave it there. And then the smaller amount that you want to use for the year, you can trade with it. And it's also not locked away for the following year. So plan B, if you need some more cash, you can go and get it in your investment account. So yeah, that is another option. And then you can trade with a small percentage of it. So you can say take 10% of it and say, well, I'm going to trade with that and see if I can turn it into something. But before you do that, make sure that you can trade. Make sure that you can actually make a profit with some real funds, rather than just throwing all the money into the market and then finding out that that's actually not a good idea and it's costing you money. Okay, so on the account that we've got for you guys, I'm on the wrong account here. Boom, there we go. Let's go and have a look here. So this is the account for you guys. So we've got Brent crude oil on this one, which is doing okay. It is sort of, I put a Fibonacci on here, and I know I don't normally show you guys fibs, but I just put it here because Brent was just so flat. It was just so flat, and I was like, I really need to get back into Brent crude oil, and there was just no indication of which way it's going to go apart from maybe carrying on to the downside. So I threw a fib on just to see where it was, and then I found out that it's in this area. If it's in the golden area, I'm kind of okay to take a bit of a chance and give it a long trade. So that's what I've done here with this, given it a bit of a long trade and hit it up. So if you guys don't know anything about fib, if it's in between the 61.8 and the 50%, then you effectively have a, okay, there you go. You see I've taken it probably on the day chart from the low to the high. And that gives you a nice, it'd be nice if it didn't like mess me around here. that gives you a very nice indication of where the price is in relation to a Fibonacci and the Fibonacci sequence, which is in that golden area. And if it's in that golden area, look, it could come down off this 50% as well. But it's not a perfect system, but it does help when there is nothing else, because I don't use indicators, as you know. I don't use indicators to trade, and sometimes you can look at a chart and just think, which way is this going to go? You know, is it possible that it can go up? And that's why I actually use that indicator. Germany 30. I drew a couple of trend lines on here just to see where we're going. I was long on the DAX on one of my accounts. I actually sold it this morning at the top here, actually. I just felt like it wasn't going anywhere. And yeah, it's come back down again, but it's on the support. So this is very much a good long if you get a green candle coming out of here again. So there's nothing wrong with that. It's just that things are just milling around at the moment. If you look at the US 500, we've drawn this level in here, which was a resistance. It broke through. It's now a support. It came back. It tested that support, and that well, what it became a support, and it carried on going up. And it appears like it wants to continue going up. If you guys have been watching me for longer than a year or 6 months, you would have remembered at the beginning of the year, I did tell you that I think the S&P is going to go to 6,600 this year. But here again, you see, this is what the markets do to you. It caught me out as well. I was long. We were good. We had long trades going. Geopolitics came into play. They started messing with our heads. I got out of the trades because it was geopolitics and weekends coming in and that sort of thing. And guess what? Now it's run off without me. It catches me out. It catches you out. It catches everyone out. It doesn't matter who you are. It's going to catch you out. Does it annoy me? Of course it does. Of course it does. I knew it was going to go to 6,600. I owned the damn thing. I got out of the trade, and look where it is now. Okay, I'm lying to you because I do still own one SPX 500, and it's on an exchange traded fund, which is on one-to-one money. It's not leverage trading. And that one I didn't sell. So that one I've still got in my investments with my shares. So at least I still own that one, and I'm happy about that one. But the leverage trading, I got out. Because there were things going on, man. And then when you're not looking, this is what happens. You see, you miss out. Rob, how long does it take to practice to get used to monitoring 8 to 9 pairs at once? How long does it take to practice to get used to monitoring 8 to 9 pairs at once? It's actually a difficult question. I have to say that's actually a really, really difficult question because I monitor more than 8 to 9 pairs. How long does it take? It depends on the person. It depends on you and how quickly you can read charts. You see, if you're using indicators of some sort, like moving averages, MACDs, RSIs, whatever the case, it's going to take you a lot longer than it's going to take, for example, me. I don't need any indicators on a chart. So what I do on a chart is I'll pick it up in the morning and I'll just go through all the trades. So for example, I'll pick up a US dollar CAD, and I'll look at it and say, oh, yeah, that looks like it's going short. And then I'll just go through all the trades, and I'll just look at the chart and just determine just at a glance which way it's going. I don't know how long it took me to get to that point. I really don't. I expect it'll take you a couple of years to have that kind of experience where you can just glance at a chart and tell you which way it's going. But by the same token, the trading on the charts itself is actually insanely easy. I could teach it to a primary school child. So you could be able to do it quite quickly if you concentrate on that. Because it's not the charts that make you the money, as I've told you guys before. It's the strategy that makes you the money. The strategy, the risk management, how you manage your risk and how you make your profits. Your business plan is what makes you the money. And you have to separate that from the charts. The charts are a system. And whatever system you use will probably work because they all work. The thing is, when you take a trade on a chart, whichever way you choose, if you say, I'm going to sell this now, there's only two ways it can go, up or down. Somebody the other day said to me, oh, there's a third way, sideways. No, it doesn't go sideways. They always go up or down, even if they're going sideways. Price doesn't stay the same all day, unless it's a penny stock. So anything like this will go up or it'll go down. It's a sell or it's a buy. So if you decide to sell, then somebody's going to buy it from you. That's just how it is. There's no way of working around that or telling me anything different, which makes it a 50-50 trade. No matter what you think your edge is, what you think your system is, how much you paid for your course that told you you're going to win 8 trades out of 10 means nothing to me. Win rates mean nothing to me. What means something is being able to manage your risk and make a profit in the market. If you're risking 1% of your account on every single trade and you keep it the same and you try and make more than what you're losing, then there's a chance at the end of 10 trades that you'll have some kind of a profit. And that's what you're trying to achieve. Win rates don't make you money. All win rates do is give you something to boast about. It's easy to have a win rate. I can make $5 on every trade and then lose 100 on the 9th trade. I mean, really, what's a win rate? At the end of the day, it's a waste of your time, a waste of everyone's time. So that's why I say to you, you can pick a trade either way. And I've said, and I've done this experiment before, and you can do this experiment. I just don't know how I would be able to do it with you guys, but the point is you can't really do it by yourself because, like I said to you, I can look at a chart and I'll have bias immediately as to which way the trade's going to go. So my experiment went as follows. Many years ago, I took a family member and said, you know nothing about trading. For a week, you choose all the trades. There's no lines on the charts. And effectively, we managed the trades and, well, I manage the trades. You choose the trades. Effectively, at the end of the week, it works out the same. It doesn't get much better or much worse. It's not like every trade was lost. Half the trades were won and the other half were lost, just like any other system. So does the system really benefit you in any way? Yes, it benefits you because you can draw a line in the sand. For example, I've drawn in this trend resistance over here. And I now know that if the price goes through there, I want to go long because I feel confident and I've got an edge. And I feel confident that I know something that you don't. And I know that that's going to go long, and that's my opinion. It might go the other way. I see the non-farm payrolls are coming up. There seems to be some kind of, yeah, okay, we'll see. Not too worried about that. There we go. There's some movement. Wow, look at that, eh? What am I on? US dollar CAD. Okay, so there's some movement going on here. Interesting. So should I look at Brent and see if that's doing anything? No. My JAP 225. Oh, that's not good because I've got a trade in there. Right, so that's causing movement on that, which could be detrimental to our health at the end of the day. Let's go and have a look at our other trades. You see, this is what these news events do, these little news events. And people hang their hat on them, and it's really a total waste of time. What I'm going to do is going to go and have a look at that account and just see what's happening there, because there I've got more invested in the US dollar than one would like to. We've got gold, which is now losing. We've got the Euro Great British Pound, which is winning, and the US dollar ZAR, which is coming back into play. So the US dollar ZAR, so those of you that have got the South African Rand, it might benefit you whatever's happening right now at the moment. But this doesn't stay permanent. It's a temporary move, let's say. Okay, let's see. Same happened to me. Lowered my risk as I anticipated I would get worse with the war. Now I wait to see what happens next week with the tariffs. Storage trades. Uncle Mike's Ashton says the third way to the. Okay, I don't know that. Rob, how long does it take to? Okay, yeah, now we're back on that. All right, so there is some movement here. Let's just see what's happening here. Well, it would be nice to see the ZAR one go back to the other side. So, yeah, nothing wrong with that. But this is all going to settle down again in a few minutes. It'll probably go back to where it was. My biggest concern is that one, because I have a short on that one. I wonder what let me go and have a look at what my stop loss is on that one. And then we can see if we need to do anything with it. Where are we? Jump 225. Oh, the stop is at, gosh, it's a trailing stop. Why did I put it? I didn't want a trailing stop on this product. I want my stop loss up there, okay? Above that high. Why does it keep bringing me a trailing stop? Okay, right. So this is not looking good. Looks like it wants to turn and go the other way, which is going to cost us money if it continues. So the mere fact that it's doing that, I'm actually going to stop out of that one. Let it go. That's a nasty trade. Okay. I will keep the Brent crude oil trade. That's fine. Okay. That one's going against us. I'm not going to continue on along that road. That's not working out in the slightest. All right. Sometimes that's the best way to go. Look at this Aussie dollar, US dollar. That's also coming down the other way. I expected that to go long this morning. And then we've got, okay, Brent, I'm going to leave because that's going to go well on this one. Okay, so that's fine. Let's go and check the other account out. Okay. See what we've got going here. Well, this one looks okay. This one's kind of going in our favor. I'm not going to concern myself too much with that. And the Euro Great British Pound shouldn't really be affected too much by this. There's a little bit of movement there. We are short on that. And the reason I'm short on that is because it's sitting in that range and it's right at the top of the range. So I took that one. United States dollar, South African rand is kind of going back in our favor. And gold, we'll have to see what happens with gold. Because I went long on gold. And now it's falling by the wayside. Okay, that one will keep. We'll see what happens with that. All right, fine. Tim, hello, Tim. How's it? Shane, how did gold go for you? I'm still in the gold, man. Look here. Still in the gold here. Still long on the gold. And now it's just turned against us now. So that's a bit nasty. But at least this United States dollar against the South African rand is turning back around in our favor, so that'll be a good one. And then Euro Great British Pound seems to be okay. We'll see how we go. The DAX I sold on my other account this morning. Should have kept it. It looks like it's going up. And then I just dumped that Nikkei because it was short and it's going long now. Your thoughts on gold? I reckon it might turn bullish around 33.10 or 33.24. Well, I hope so because I'm long. But yeah, there is a level here, and there's another level a little bit lower down. My stop loss is all the way down here at 32.50, so I'm pretty safe. I'm just going to keep it long because I think, if I look at this, it does seem to have tried to go bullish, and it did break through the trend resistance. So I was looking at that and thinking, oh, that looks good. And yeah, that said, we are getting a little bit of a run down here, probably because the jobs figures weren't good enough. But this will settle. It should settle down. So yeah, you might be right. 33.10, 33.20 should bounce, maybe go back up. But there's no guarantee of that because it could, come falling through here. And then there's obviously this level here as well that could cause us a headache. It doesn't look too bad though. I think it'll be okay. See how she plays out. But yeah, I agree with you. I think it's got an opportunity to perhaps turn around. And normally after these things settle down and all the economists have worked out that it's all a load of rubbish, then it normally settles back into its place. So it'll probably settle back into its place a bit later on. I dumped the Nikkei because that one looked a little bit more ominous. It doesn't, I don't feel good about it. It just seems to be, it was bullish. I had the short trade because it broke the trend and it broke out of its, there's a level here of resistance and became support. And it's going back in and it just doesn't look good. It looks like it wants to fall back down, go back up again. So I'm just leaving, I'm getting out and we'll see. It could go all the way back up to here. I'm just getting out and we'll see what happens with it. So that one I dumped early. Rather dump the losses early. Don't hold on to the losses. Dump them as early as you possibly can because the losses... the losses can get out of hand. And, you know, if you lose 10 trades and they're for $70 and you were targeting 250, there's no problem. The problem comes in when you get out of your profits early. That's where the problem comes in and you start losing at the end of the day. Okay. We're still above the broken trend line. Yeah, no, it's okay. We'll see what happens now. I'll see if it bounces off there or not. I mean, if it goes nightmarish, then yeah, we'll get out of there as well. It's not like we're major down or anything like that. We were in profit earlier on. My major concern is this South African Rand one is falling back again. So that means it's the dollar's already settling over here. The dollar's already settling back after the news, but gold isn't. And it should settle back. So keep an eye on that. That should settle back to where it was. Let's just see how that goes. Okay. A dead cat bounce. I wouldn't say dead cat bounce. No. Dead cat bounce is a much sharper bounce. No, this was actually a good breakthrough, and it looked good. Dead cat bounce would have been that, and then drop off. But no, this is not a dead cat bounce. It might be a false break. More like a false break than anything else, but we'll see. I'm just keeping an eye on it to see if it's going to get out of hand or not. If it doesn't get out of hand, we'll keep holding on to it. I don't have too much of a problem with it. This is just a result of what's happening now, and I'm just looking at if the dollar is already sort of recovering, then this should start recovering as well. We should start seeing the tail here. The buyers start coming back in. We'll see how that goes now. We'll see if the buyers start filtering back in. And this, you see, this is a big telltale sign that tail is developing on the rand. Which tells me if that tail is developing into the rand, then the tail should develop into the gold as well at the end of the day. And then the Nikkei really is flying now. That's going up at quite a rate. I'm actually quite surprised at how heavily gold is getting whacked. Unfortunately, this particular package doesn't hold on to these prices for some reason. So that keeps on getting stuck in one level. I don't know why that is. It is trading view, but for some reason or another, this keeps getting stuck. I must still figure out why that is. But okay. Gold is taking a bit of a knock. I might have to lose $50. We'll see. Okay, upside down, head and shoulders. Hey. If you want to practice price action, Is it an idea to look at the lower time frames, not for trading, but then you get the price live? I do it on the 15 versus the 2 hour. Very fun too. You know, what I will say, Morgan, is if you get bored, yeah, go for it. There's nothing wrong with doing that. As long as you understand from your own point of view, if you're practicing, that the lower time frames obviously don't give you accurate information. But yeah, you can practice there for sure. You can practice anywhere and give you the answers that you're looking for. When taking real trades, you can even, what I often do is I'll look at a trade. Let me choose a trade that doesn't have loads of lines on it, because otherwise it's just going to get in your way. But what I'll do is I'll take a trade like this. I'll say, oh, maybe I want to go long on the DAX. Should I go long on the DAX? It's in this range, and it's coming off that level, etc. A whole bunch of reasons why you want to do that. And then what you can do is you can go up on the time frame and see what it looks like for the day and say, well, that's pretty bullish. That looks good. But what would I do on the 1 hour, instead of the 4 hour? Oh, that looks pretty okay. That looks bullish. Maybe I should look on the 30 minutes and I'll drop down and say, oh, that looks bullish as well. That looks pretty good. And you might want to pick a sniper entry off the 15 minutes. 15 minutes has got a lot of volume. And you're looking at it and thinking, yeah, on the 15 minutes it looks bullish. Maybe I'll grab a trade there. So you can drop down the time frame and just have a look for yourself if you want to get into a trade for any particular reason. And if it works out for you and if it's suitable for you to maybe get into a trade at that level. I don't do it all the time though. Really don't. I prefer to just, I look at the trade, position it, see where I stand and take it from there. I literally don't even sit and watch charts. I look at the charts in the morning and I make a decision on a trade. I say, well, I'm going to take that trade because I feel X, Y, and Z about it. And then I walk away. And then during news events like now, I prefer not to be looking at my charts because I'll do what I did with a Nikkei and sell it out when I really shouldn't be doing that. But probably a good thing that I did because I can see there's a long green bar on there. That said, I held on to the gold, and the gold's got a long red bar on it, which is not going too well for us. But at the end of the day, it's much of a muchness. I don't sit and look at charts. I don't bother with them. But that's the trouble with trading, is it can be quite boring. And then you start doing strange things and you start taking trades on different time frames and doing incredible things, and it can start to cost you money. So you got to just be careful of that. Just be very careful of getting too caught up in the moment. It's better to actually position yourself, walk away, and see what happens. But yeah, sometimes, I'll sit and I'll open the charts because I got nothing else to do, and then I'll see something like that, like that Nikkei, and say, oh, let me get out of that. I don't feel comfortable about that. Take the $70 loss and walk away. That way I don't lose 250, I just lose 70, and that's fine. Same with this gold. If I don't feel comfortable with it, if it doesn't work out and it looks like it's going to just fall off the bus, then yeah, that one can go as well. Just see how it goes. You're looking for profitable trades. You have to understand that you're going to lose some trades. If you don't understand that you're going to lose some trades, you're in the wrong game. That's the point, is you've got to work out, look, I can lose so many trades and it's okay. It's okay. And I'll get it back on a couple of good trades. And those couple of good trades are what you're looking for at the end of the day. Yeah, I don't worry about it. The news at 1600 is probably not that important. And there'll be more news tomorrow. Don't forget, tomorrow there's more jobs figures. I think tomorrow, is today non-farm payroll or tomorrow? I can't even remember which way around it was. I always used to watch it. I don't watch it anymore. I don't bother with it. I keep my eye on really important news events, not these jobs figures and things like that. A lot of economists will be panicking about this now, and they'll be like, oh no, jobs now, percentage unemployment is this, and blah, 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 and all these stories. It'll all settle back into place again. Markets are controlled by money flow in the country. And the way the money flows and payments are made and the reserves in the country and the asset value of the country is what controls everything. Not these announcements about jobs figures and things like that. That just, it's kind of what we call a knee-jerk reaction. Everybody reacts, but what this reaction is at the end of the day, think about this for yourselves, is very much the big money guys. You know those guys with really serious money, the 95% of the market, those guys, they're trading against each other big time. And if they think they can pull one over on the other guy, they will. So that's where these markets move with these jobs figures and things like that. They're pulling one over on the other guy. As retail traders, we've got no chance in this. We can only trade with a flow and try and pick up the liquidity and go with it. That's all we can do. We don't have the money to move the markets like they do. So I see that the live shows now have got ratings for you guys, top chats and whatnot, and it's next to your names, particularly the main chaps. So I don't know how it works, but it's interesting. You guys can be top chat guy or whatever the case. I don't know. Yeah, I believe tomorrow is a holiday in the States. Yeah. Any idea why the U.S. employment influenced the Japanese yen so negatively? Henry, it's because it's pegged against the dollar. That's why. It's all about the dollar, and it's a bit like this rand. For example, I took the long trade on the rand the other day based on the fact that, I mean, the politics in SA are really poor at the moment, so the rand should weaken, and it gets stronger. And I look at it and think, oh, you know what's going on here? It's all in all likelihood the US dollar, because the US dollar just moves everything. It is the pivot. It is the thing that makes all the difference. And if you pegged against the dollar, that's what's going to happen. That's why I got out of that Nikkei job over there. It's all pegged against the dollar. Look how this dollar Japanese yen is moving in that direction. It's all about the dollar at the moment. You see the rand as well. The dollar's moving, and even the gold is being moved by the dollar. This is all a dollar move that's caused this. I am expecting this to recover a bit because it's just simple news and it should actually go back to where it was. So yeah, just remember, these things are pegged on the dollar in many cases. And then if there's American news that affects the dollar, because you must remember the country's based on its money flow. It's based on where the money moves in the country, and it's based on its own asset value and economy. So whatever happens with that country moves the dollar. And then if you have another currency pegged against the dollar, then it's going to move adversely with relation to how the dollar moves in relation to its news. All I can tell you is with these jobs figures that you wait for every week so religiously, and CPIs and things like that, is they're very temporary. They move up and down. Normally these things settle down very quickly. Things that can move the markets are Fed chairman speeches and things like that. They move the markets up and down quite insanely because they keep changing their mind while they're talking. But if they say something incredibly serious, that can move the markets in one direction quite heavily. So you've got to keep your eyes open for that sort of scenario. But like I say to you guys on a regular basis, remember, charts cannot predict the market. Charts can't tell you which way the market's going to go. It's 50-50 on the charts. You see, here's a chart. You think the chart's predicting your direction, so you take the trade in that direction. But at the end of the day, what's moving the markets are the fundamentals in the background of the way the money's moving in each individual country, or each individual business, or each individual product. You might be trading Bitcoin, and it just depends on the the flow of the crypto, for example, and how it's going to move. It's much of a muchness, but charts can't predict the market. All they can do is give you an indication of how to manage your risk. How am I going to manage my risk in any trade? So, you know, you take the gold trade and you say, well, how am I going to manage my risk in this trade? And that's how you go about it. You look at the trade, you say, I'm taking the trade there, I'm putting my stop loss there, I'm putting my take profit there, I've managed my trade. It's the only way you can work with it. And like Shane asked me, how did my gold trade go? You might have asked me that because it's one of the few trades where I actually took a one-to-one. I don't normally take one-to-one trades, but a one-to-one trade, there's nothing wrong with it because you can always manage the trade when you get close to your take profit and try and make more profit. So you can take one-to-one trades. It's just better to take trades that offer you more profits at the end of the day. So the other account has now only got Brent crude oil on it, so I'm not going to watch that right now. I'd rather watch this one because it's got a few more trades on it. Okay. Rob, any idea why the US employments influence the Japanese yen, even on other yen pairs? You see, other yen pairs might be affected by sentiment at the end of the day. The sentiment can cause a lot of movement in the markets. Generally, it's caused by being pegged to the dollar, but sentiment can also cause these effects. For example, the Nikkei suddenly moving up is caused by the yen being affected by the dollar, so that's a knock-on effect. Maybe the yen being affected by some other news around it as well. You might find that the dollar being stronger or weaker may have an effect on import-exports on the Japanese yen. You know, there's a whole number of things that can have an effect on these products. So just bear that in mind, that it's not always a direct effect. Is very often a knock-on effect. For example, the US dollar Japanese yen, there's a 1.15% move if you look on the right here. And then if you look at the New Zealand dollar Japanese yen, there's only a 0.3% move. If you look at there's another one, Great British Pound Japanese yen, there's a 0.77% move. So the move is not as extreme as with the US dollar, but there's a knock-on effect as to the Japanese yen getting hit by that particular, and that can be because the Great British Pound is holding up, or the New Zealand dollar is holding up a lot stronger against the New Zealand dollar than the Japanese yen is, for example. So there's a whole bunch of little things that go on there, knock-on effects that can affect that. But if you're going to play your trading into that much fundamental information, it's going to be very difficult for you to work out your trades, because you really have to know in depth what's going on with each individual currency and each individual little piece of news. And if you turn on a financial markets news thing for Forex, you got a list this long every day, which will drive you insane. Believe me, I've worked with that in the past, and I've thrown it all aside. Like I said to you guys, when it comes to the fundamentals these days, I only look at the big stuff, the really big stuff, the movements in the world. Like I said, a bank is going bankrupt, or they're closing down Bitcoin, or tariffs, or geopolitics, or something like that. That will make me look. But these jobs figures, CPIs, things like that, economists and whatnot, unless, of course, there's a massive difference. For example, we're expecting 200,000 job gains today, and they get 5 job gains. That's insane. That's a big problem. Then there's something effectively wrong with the economy. But if it's 10,000 off or 20,000 off either way, the same as every week, you know what I mean? It's not going to make a hell of a difference. But where the differences do come in is when it's large differences. You're expecting a 5% unemployment in the country and it turns out to be 10%. Oh, wow. You've got a serious underlying problem in the country, then you really need to look at it. Now that can be an issue. That can be something you need to look at. So you keep one eye on that, but generally you don't see that happen. Very seldom that you see that happen. There was a time, I can't remember when it was, but there was a time when there was some extreme moves in the jobs figures, and then I used to keep an eye on it on a weekly basis. They were jumping. I think it was probably close to the 2008 crash that time around, when we were getting some days 400,000, the next week 100,000. They were trying to correct for it, and it was insane. Those kind of differences are problematic in the market. But when they generally average out pretty close to where they should be, you really don't have to worry about it. And then, of course, interest rate hikes and not hikes and reductions and those types of things do make a difference to the forward outlook of the country's shares and companies and things like that. Because if you're investing in, say, retail, then an increase in interest rates or a decrease in interest rates can obviously affect the outcome of that business, because that business has, for example, large business loans against banks that they have to pay back, and if they've got less interest to pay back, they're going to show more profit, or vice versa, and all these different types of small, just to keep it simple, those types of things. So that does affect the markets in one way or another, which obviously leads back to affecting the indexes and even the dollar. So interest rate hikes and decreases, those can have an effect on the markets in the forward performance of the market. Because you must remember, when you're trading in the market, if you're investing particularly, but even in trading, you're not looking at the price based on today. You're looking at the price based on tomorrow or the next day or in the future or sometime in the future. You're buying with a view to making a profit at some time in the future. How far that future out is, it depends on what you're trading or investing in. Everyone trades that way, whether it be a seller or buy. You're looking at a different price sometime in the future that's going to make you some kind of a profit. So it's a forward price that you're looking at. You're not looking at today's price. Today's price is your entry. Tomorrow's price is your profit. That's how you trade everything. So you look at everything that you buy with a view to where it's going to be at some time in the future. So when you're buying something, you've got to have an idea of, why would it be there in the future? Why would it have that value in the future? And if there's interest rates involved, that might affect it. See, we were so used to trading on little lines and little charts that you tend to forget that that's what the market is actually all about. And yes, while you can use these lines as a line in the sand to take your trades and make it easier for everyone to trade, you do have to remember that there is an underlying current that makes all the difference in the markets, and that's why you have all these numbers jumping around and moving up and down on the side here. There's people buying and selling into these things because they believe the market's either going to go up or down. And there is only two ways that it goes, up or down. Okay. Gold 4-hour candles close in 1 hour. 1 hour. I think it depends which chart we're on, actually. If I look on my other charts, it's probably different to this one, but my other charts actually tell me when they're going to close. This one doesn't, but it's okay. Yeah. I see the rand is, you see they've got that tail. You see they're all starting to settle back again. See, there's a tail there. It's starting to settle back to where it was. Gold as well. Even gold is starting to now settle a little bit. The tail is starting to grow. It's starting to settle a little bit. So yeah, it was getting out of hand, but it's settling a little bit now. I just want to check the positions. Unfortunately, with this one, I do have to check. But yeah, that's where we are with it. It's quite interesting. I didn't take gold on the other account, so we can go and have a look at that just now. But interesting, very interesting. So I don't know how many of you are actually retired, or how many of you have actually left your job to go and start full-time trading. But that was the question I put to you at the beginning of the video. Should you leave your job, start trading? Should I leave my job and go and start trading and get the freedom of the world and whatnot? And is it really a good thing? And is it something that's really going to work out for you? Are you going to be able to work with that or live with that? Because at the end of the day, like I say, you got to pay the bills at the end of the month, and that becomes quite complicated. And then you start panicking and you start taking some crazy little trades that you shouldn't be taking to try and pay those bills at the end of the month. It's always a problem. You know where the big issue comes in as well is if you have a plan, and I think the David said that he had a target of $200 a week, and I understand that most people do. So you have a target. Now some people have a target where they say, I'm going to come in at 9, I'm going to trade for 2 hours, I'm going to make $200, and I'm going to go off for the day. That's me. That's my working day, 2 hours. Fantastic stuff. Others might say, I'm going to come in at 5 in the morning, I'm going to do all my research, and then I'm going to trade for 2 hours between 9 and 11, I'm going to take the rest of the day off. And that's great, because it's very presumptuous of you to think that you're going to make $200 profit. Very presumptuous of you to think that you're going to make $200 profit, because in all likelihood, you're going to come in, do all that, and make $200 loss. And then you've got a decision to make. What do? Do I stay here and carry on trading and try and get that $200 back? Or do I shut down shop at 11 o'clock, like I said I would, and go to the beach? Well, I wouldn't go to the beach at the moment in Cape Town because it's freezing, kind of cold, it's winter and it's raining, so I'll probably stay at work. But all I say is it's very presumptuous to believe that you're actually going to make that profit. And then the reason I bring that up is because now I want to extend that. Now I want to say, well, okay, maybe you've got that target for a day. Maybe you've got that target for a week. But the end of the week comes along and you haven't made that profit, and instead of making the profit, you've made a loss. Now you're on the back foot, you're behind. And that's where, we become presumptuous, thinking this is best laid plans of mice and men. I plan to make this money, and I'm going to make this money, and then you don't. That's a bit of a shock when you don't. Now you must remember, when you're going to your next cycle, whether it be the next day, the next week, the next year, whatever the case, you're now holding a loss. You're holding a loss. Do you write that loss off? Or do you try and get it back? What do you do? These are things you've got to think of when you get into trading. It's not just all profit. That's the trouble with, and I don't want to, I'm in it as well. I mean, I'm here on YouTube and I'm trying to show you guys trading, for example. And there are a lot of guys out there that will make it all flashy for you, and it looks great, and it looks like, oh, well, I can only win. I can't lose. I can just win here. I'm just going to make loads of money, and it's going to be easy, and I'm just going to target that $200 a day because Adak's doing it, so surely I can do it. Is he doing it? I don't know. Maybe not. And it's a difficult one to explain, but you have to get your head around the fact that you might lose, and you've got to have a plan for that. And that's why you need a business plan, you need a strategy, and you need to not forget that it's not the lines that's going to make you money. Lines are not going to make you money. They're just going to give you the trade. Hey, lol, left my job 2 years ago and still not profitable yet. Hope you're not married, dude, because sure, the wife's going to be beating you up, Jana. Everything ever works if you work at it. You have to spend time learning, as with everything. It was $500 a week. It's a good target to have, but yeah. No target. I just trade what I see in front of me, but don't be fooled by the markets. I'll teach you hard lessons, but it's always there for the taking. Targets, put unwelcome pressure on your trading. Let the market give you what I need to give you. Never push, lol. There's no luck when it comes to trading. Daniel has a good point there. And maybe I didn't mention it, but targets put unwelcome pressure onto your trading. He makes a very, very, very good point there. Excellent point. I think, let me know if you guys agree. Lucky for you, hey, because if you were married, the wife would be all over you as to where the money's coming from. But anyway, we'll put that in there. That's a subject for another day, maybe even another channel. But I like, no, targets put unwelcome pressure on your trading. And I tend to agree with that. Heavy targets put an unwelcome pressure on your trading. That said, I do have a kind of a mental idea of what I need on an annual basis, right? So however I make that, that's okay, whether it be from the investments. But when you're in a position where you can take the money from investments and you don't really have to pressure it, then it's okay because you're not pressured on the trading side to make the money there. But if you've only got the trading, then yeah, it could put an unnecessary pressure on your trading because you start becoming desperate. You start becoming desperate to make more money off of your daily trading. So if you didn't make the $200 that you expected to make by 11 o'clock in the morning, and you happen to be $200 or $300 down, then it becomes the question of, I need to make that back. And how am I going to make that back? And how am I going to make that back quickly? So you start over trading, you start looking for trades that don't exist in the market, and you start taking those trades, and what happens? You lose another $300. So now you're ending the day, instead of $200 in profit, you're ending the day $600 down. And the next day you're coming in with that same, don't tell me it just falls away, because it doesn't. You wake up and it's still there. Like, I lost $600 yesterday. Need to get that back. My account's $600 down. You're looking at the figures and you can see them on the screen. They're there. They're not lying to you. They're telling you lost money yesterday. So your immediate reaction is, I need to get that back. Your immediate reaction is not oh, I'm going to make $200 today. Your immediate reaction is, I need to get that $600 back. And that just makes it worse again, because you start taking bad trades again. Or the opposite happens, and fear steps in, and you become too scared to trade, so you don't take any trades. There's that. That happens as well. It's happened to me before. It happens. Where you come in the next day and you think, oh, I lost so much yesterday, I just don't want to take a trade today. I just don't want to touch it, and you can't take that trade. You just can't press the button, because you just think, well, if I press the button, am I going to lose another few $1,000? It's a funny thing. So there's two ways it can go. It's either you're fighting to get it back, or you just become so scared that you don't want to take the trade. Here's an insane thing in the market, say. And also overconfidence, patience, fear of missing out, so many things that can affect you in a market. And yeah, it's how it is. Okay, so where were we? My target is to execute 3 good trades a week. I cannot control the profits or the losses. Manish, what I would say to you is, yes, that is a good idea. Try and make 3 good trades a week. But what if you don't? What if you lose every single trade this week? You see, you have to accept that. You have to accept that that could happen. The other thing is, if you do have 3 good trades in a week, are they more profitable than your losses? Because sometimes they're not. So you need 3 good trades that are more profitable than the other 7 trades that you lost. So then you've got a profit, because that's strategy. So you need profitable trades. It doesn't help you have 3 good trades that make you $30 and you have a bad trade that loses $147. See, you need it to be the other way around. This needs to be big and that needs to be small. So, you got that sense. That number up there needs to be green, not red. That's all I say. So yeah, that is a fair target to have. Try and win 3 trades out of the 10 for the week. I think that's possible because in all likelihood, if you take 10 trades, you should win, if not half of them, pretty close to half of them. So you've got that option. When you win them, though, you want to win more than what you're losing on the losing trades. Okay, so trading the longer term charts leads to high probability of being profitable, but most can't afford the drawdowns of trading the longer term charts. Yeah, Nick, you make a good point. And that's why I say if you want to be in this game, you've got to have some form of capital. So many people are telling people that they can get into this game with no capital. And I don't get that. I just don't get that. You can't get into this game with no capital. You need capital. If you want to build a portfolio from nothing in this type of scenario, then you need an income from somewhere else. Because if you've only got $1,000, you can't live off of it. You can't get into this and think you're going to make a profit out of it immediately. You've got to have money from somewhere else. Then you can take that and you can, from a small amount, start building it up gradually over time. But, it's very presumptuous to think that you're going to come into the market for a very small amount of money, trade against the pros, which make up more than 95% of the market, and with their big money, and somehow beat them and somehow be in the top 1%. It's not going to happen. It's not going to happen. It's not going to happen easily. So if you want to build that $1,000 up that you've got, you need to do it slowly and you need to do it timeously. It's not going to happen overnight. And there's too many people out there promoting that you can just come into the market with $1,000 and turn it into a huge sum of money, and it doesn't work like that. If you want to build that up, then you need to have income from somewhere else, and then you can put that in the market and you can start working on it slowly but surely. Make $10 here, $20 there. Grow it over time. Same as if you put $100,000 in, now you're making $2,000 here, $1,000 there. You're building it up over time. The more you've got to cover you, the more money you can make. And there is a certain level of money that you need to cover your lifestyle. And that lifestyle you can work out for yourself. Well, I presume I'm going to make this much profit over an annual period, so I need this much money to be invested so that I can make that much profit over that annual period. I've been thinking about your 50-50 probability because yesterday I had a good short on UCAD after the news, but got scared to close it at break even after I convinced DXY is going higher. DXY did pull back. Yes, everything is a 50-50 probability, which is why we position our trades. And we position our trades with a stop loss and a possible take profit. Try and manage the take profit. And if I do see that I need to get out of a trade early on the stop loss side, on the negative side, I will. I'll take small losses wherever I can and try and make bigger wins. The only reason I'm holding on to this United States dollar, South African rand, is because I am still convinced that the South African rand should be rubbish and it shouldn't be as strong as it is, but it's more based on the dollar than anything else. And I do believe that this will still work out, but it might not. It might not. Now, in all normal circumstances, looking at that chart, I would probably just get out here and take the $150 loss and walk away. But I just feel that this trade has an opportunity, so I'll give it its space, give it its room, and just see if we get lucky, because it's all 50-50 at the end of the day. The whole market is, all these charts are 50-50. What's your edge is all in your strategy. Your edge is in the strategy of trying to make that win and take that loss. In other words, if I lose 244, okay. But if I win 439 on every trade, okay, that's okay too. Then I'm making money. So it's very seldom, like I said, that I take a one-to-one trade like this on gold. But if you take a one-to-one trade like this on gold, and there's nothing wrong with doing that, I won't take a less than one-to-one trade, but a one-to-one trade on gold, I look at it and I say, well, you know what, I've got the opportunity here. If this goes long and the gold price gets up to here, what I'll do is I'll move the take profit out a little bit, and I'll move the stop loss up right behind it and trail it. And then I might make more than one-to-one when it gets there. But on the stop side, I'll get out before it gets to that or when it gets to that. So I'll manage the trade in that way on a one-to-one trade. So you can take a one-to-one trade. There's nothing wrong with a one-to-one trade. Look at the Euro Great British Pound trade. Look at my risk to reward on that. I'm risking $233.30, and I'm targeting $790 profit. That's what I'm looking at. And I might not make the full profit. I mean, I might have to get out earlier or whatever the case. That's fine. But if I make the full profit, that's a serious win. I don't even know what that is. 3-1. I don't know. It's serious. I win. Yeah, it's decent. That covers, a lot of hassles. So that's how you look at it. And you are going to take a couple of losses along the way, because that's what trading is about. You're going to take a couple of losses along the way. Focus only on the trade you're actually in. Everything else is an illusion. Not true. Therefore, you can't reward you. Therefore, what you do when you trade is way more important than for trade. Tiago Cash. Hey, Rob. How's it, Tiago? 80% mindset over 20% analytical setup for the trade. Blue Mango. It took me 2 years just to break even. It takes a lot of time. Yeah, no, totally. When I started out, like I said, we didn't have computers, and then I think it was, I don't want to say it was more difficult for us, but let's be fair. We didn't have leverage trading to start with. I had to trade one-to-one. So it was a bit like investing, but what they sucked me into the market with was these lines, these up and down lines, and they said, well, instead of just buying into shares, if you buy it at the bottom and sell it at the top and buy it at the bottom again, then you're going to make more on your investment and your money and whatnot. And that's what got me into trading. But even that, it really did take me a long time to get my head around it and to start making a profit and winning. And when computers came out and leverage trading came out, it also became a relearning process, because you go from that, where when we had one-to-one trading and it was like buy a share and hold on for it for a couple of days, I mean, we would literally put a 10% stop loss on. Because if you invested $1,000, then if you lost 10%, you lost $100 off the account. So it was okay. And then when leverage trading came along, you immediately got into it and you started putting the 10% stop losses on, only to realize that if the price went 10% down, you lost your whole account. So then you sort of had to relearn the whole process. So that took a little bit of time again to get our heads around that. It wasn't just me, it was everyone had to get their heads around leverage trading. And that took a while to work that out as well. Work out little systems that make sense. And it took me many years to come up with the fact that, or the aha moment, as I put it, that the lines don't make you the money. It's all in the strategy and the business plan. It took me many years to figure out that you have to separate the two, take them apart, and work with risk management and a business plan and take your trades based on the charts. So the charts allow you the opportunity to grab a trade. There's a trade, I'll grab that. But that's not where the money is. The money's in the strategy on the side, which is going to make you the profit at the end of the day. And as I showed you now, the strategy is simple. It's not complicated at all, guys. The strategy is simple. I'm taking my trade there. I'm putting my stop loss at 1% of the account. So I'm putting my stop loss there. And then I'm taking a profit, which is way above the stop loss amount, a much bigger profit than what I would take a loss, and an achievable profit. Why is this an achievable profit? Why is this? You look at this and say, but Rob, how can you say that's an achievable profit? It's an achievable profit because that's a resistance level. That's a support level that I put in on the day charts. And this is trading in a range in that level. So my opinion is that there's a good chance that it'll get to the bottom of the range again and it'll give me that profit. So that's the plan. So now I have a plan in place. I have a strategy and I have a plan in place. Nothing to do with the charts, though. The charts are just telling me that that's what could happen. That's the probability. The plan is to manage the risk and to try and make the profit. You need the charts. Don't get me wrong. You need the charts to take the trade. Obviously, you need the charts to take the trade. Otherwise, you wouldn't have any, you'd have a blank screen and you'd be thinking, oh, you know, if you just had these numbers, you could still manage the trade, but it'd be a lot more difficult, wouldn't it? You wouldn't have anywhere to draw your stop loss in or anything. You'd just be all over the place. So it's better to have the charts. Okay. Back in the day, you had to call your broker and commissions were expensive. Yes, they were insanely expensive. And I don't know how old you are, Nick, but we had dial-up telephones. You know, like the dial telephones. We used to call the broker. So I would buy the newspaper in the morning. I'd buy the newspaper in the evening. And in the evening, I'd go through that thing and see who I'm phoning in the morning and buying, and then buy them paper in the morning and go over it at work when I got a chance, and then have a look at what I'm going to do later on in the day. In those days, I had my businesses and stuff like that, and there was times when I was just trading as well. And then I would look through that newspaper and just sit and go through it, draw lines on a little chart. Yeah, it wasn't, there was no day trading back then, Nick, no day trading. What we call day trading back then was effectively what we call investing now. Effectively, you bought it today, and then you held it for a few days. Well, we still do that with position trading. Because very much it was position. And when it moved a reasonable amount, because the fees were a good 7 points or whatever the case, then you would maybe sell it and take a profit because the costs were so high. So it was quite difficult to make a profit in those days. And remember, it wasn't leveraged. So if you had $100, that's all you could buy, $100. There was no spend $100 and buy $1,000 worth of shares. It was you had $100, you bought $100 worth of shares. That was it. There was nothing else. And there was no buying 0.5 contracts or 0.2 contracts. And if you wanted to buy, if you wanted to buy a share, you bought a whole share. Okay. There was no partial shares or mini contracts or whatever. You bought the whole thing. You needed to have money to get in the markets. And I think that probably is what made a lot of difference to people in the old days, is you needed to have money to get into the markets. You couldn't just get into the markets. And what did I tell you guys about half an hour ago when the news came out? Did I tell you that everything will settle back into its place? So here, gold is settling back into its place, slowly but surely settling back into its place. And the Euro Great British Pound slowly, surely settling back into its place. And of course, this one is also settling back into its place. Unfortunately. So the news has gone by the wayside. Not important anymore. Apart from on this Nikkei, which does seem to have gone pretty long. Okay. Can you suggest 1 or 2 reputable brokers to use for a trading account in South Africa? Mr. McGregor, I would like to suggest 1 or 2 brokers that you can use in South Africa, but I don't want you to hold it against me. I'm going to tell you who I think is the best broker in South Africa, and you can take it or leave it and choose for yourself. Do be advised that it's entirely up to you. But my favorite broker in South Africa is GT247. Take it or leave it, use it for yourself. You can also use AvaTrade, and for overseas trades, IG is also available, but they're quite expensive. And there's a whole number of other people available as well. But my favorite is GT247. Bear in mind, they only use MetaTrader 5. You don't get TradingView and all that kind of stuff for them. So yeah, what I've got here, these are funded accounts that I'm playing with so that I can show you guys online how to trade, so that I don't mess up my cash accounts. So these are just funded accounts that I play around with, okay? And they're good fun to play with and to show you guys how to trade and stuff like that. But the cash accounts, they're on MetaTrader 5. You have to get used to that account. It's a bit outdated now. But yeah, if you want a good broker, a safe broker, they've been around since I've been around. That's a long time. You know, when I took them on, because they're affiliated to Purple Capital, and when I took them on, Purple Capital had a big problem, and they'd almost gone bankrupt, and I risked taking them on because I sat with the guys, I spoke to them, and they were decent chaps and all the rest of it. And I got to know them, and we had a few drinks together, and I took them on, and I'm never looked back. Never looked back. They've always been honest, always been up and forward, and now they've got one of the biggest companies in South Africa because they own Easy Equities as well, which is a massive investment company. So if you want to invest in shares at a really low price all over the world, you can invest with them as well. So I've got investments with them as well. So yeah. Why am I promoting them? I don't get... There's no affiliation, guys. No affiliation. I just use them. Okay. So yeah. That's who I would go for. Okay. But like I said, do not hold me to it. All right. It's totally up to you. If you have a bad experience in any way whatsoever, but you shouldn't. You really shouldn't. You won't. The guys are good. Okay. They are good. Probably the best in the business. All right. Rian, how's it, Rihanna? Good stuff. Also, price-wise, you can negotiate rates. Depends how much money you got, though, you know. But if you've got good money, you can negotiate good rates with them. Whereas with IG, not so much. They're not very negotiable. Thanks, yeah. Yeah. No, that's always the thing that you know. It's easy for me to. It's like even the things I got in the description that like I affiliate myself sometimes to people, just for the sake of supporting the channel or whatever, or they ask me to or whatever the case. But I don't like doing it because I don't want my name out there tied to a product as such, you know, whatever the case. Because I'm not in control of it. It's not my product. I'm in control of this YouTube channel. And I can help you guys trade, and I can show you how to trade. And like I've said to you before, I do it mainly because I got bored and it's something for me to do. And I enjoy doing it. I enjoy imparting my information onto other people. So that's what we as traders do. You'll find yourself when you become a reasonably good trader, or you've been trading for a long time, you do like to talk about it. You do like to tell people about it. And you do like to help people with financial information. You'll find as well, when people know that you do it and you're sitting around with a bunch of friends and maybe you're at the pub or whatever the case, they'll ask you questions, they'll ask you stuff, and then you'll go off on a rant and start telling them all about it. It's nice. It's enjoyable to do that. That's why I do it. And you'll find yourself doing it as well, because, I think the main reason is because normally when you are trading, you are kind of alone. There's no one else to talk to about it. So you don't talk to anyone about it. So when you get the chance to talk to someone about it, it's kind of like it just comes out, like it just comes out, it goes mad. So yeah, like I say, yeah, it's like I said, IG, they're a bit expensive, and yeah, they have a lot going on. I mean, they do have a lot going on. They're not the worst company in the world, and I really don't see them as bad, but yeah, maybe a bit more expensive than the others, and maybe less negotiable and less personal, I suppose. The other guys are more personalized and friendly and stuff. Okay, just for information and that sort of stuff. Oh, I don't know what happened there. Let me reload that, see what happens. Boom, 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 boom. And hopefully that comes back. I shall go and check and see if it's come back. It has, but we can always move on to the other account as well. But that one did come back. JAP 225. Let's see what happened here. I did get out of that one. And yeah, looks like it wants to go up now. Does look like it wants to go up now. Brent crude oil. Am I at least making some money on Brent crude oil? Yeah, that's okay. It's not too bad. That looks all right. Still a Canadian dollar. Oh, US dollar, Canadian dollar's turned around quite a lot since the news, eh? Look at that. Bit of a short there. You know what's sad with trading is we were actually short here on this account, and it went beautifully, and while I wasn't looking, it spiked up and took out the stop loss, and then I left it, and it's just carried on going down. I mean, we could have been in a decent profit, yeah. Yeah, I guess that's just how it goes at the end of the day. I have an account, but I'm not happy with them. They're a forced minimum stop. Forced minimum stop. I haven't encountered that. Okay. All right. Maybe depending on the type of trading. Yeah. Oh, it depends where you live, I think. Yeah. I know that there's some rules. I know you're in Australia, but in USA, I know they imposed some rules with regards to you can only trade futures, and they got minimum or maximum account sizes and minimum stops and all that kind of stuff. I think it might be regulation. You see, in South Africa, we don't have that regulation, so we don't have a problem here. We can kind of go mad, but I think they've regulated quite a lot because of people that just got out of hand and started ripping people off and stuff. So yeah, it might be something to do with that. Okay. The Forex trader. It's interesting though. It's actually very, very interesting. Daniel, when you said focus only on the trade that you're in. I'm just thinking about that now. Focus only on the trade that you're in. And I just said if you focus only on the trade that you're in, then you've got to pick up other trades as well. So you do have to spend some time, usually in the morning, just looking over the trades and see if there's anything to pick up for the day. So guys, do that. Do put that into your system. So you see here on these accounts, I've got this list on the side, and on the other account as well, other accounts as well, I have these numbers on the side, or these instruments on the side, okay, that you can take a choice from. And then I just go through them early in the morning and just see if there's any trades that look like there might be something worth trading or not. Is it something I want to get involved in? Is there something I want to get involved in for the day? So, you know, when you say concentrate only on the one trade, yeah, concentrate on the trades that you're in and manage them and watch them, but keep your eyes open for another trade. So don't take your eye off the ball. There's always something coming up, something looking good, and you might just want to get involved in it. Jane says, I think it's because my account's under 100K. Could be. It could also be the country that you're in or whatever the case. Yesterday I screwed up on that UCAD short because I was focusing on not losing money instead of just executing. You know, the US dollar Canadian short, that we were in that. We were doing well, and then we got spiked out, and then I didn't get back in. Should have, but I didn't. But you know, that's trading. That's how it goes. You know, you can't win them all. So the gold trade is now doing a little bit better. So I'm very happy to see this on the candle. Hopefully the candle closes somewhere there, because then we've got this all the buyers coming back into the market, and then we'll get some upside out of the gold. That said, you know, like I said to you guys, after the news, these things settle back into place. I believe that's probably what's happened here. Same as on this ZAR. See, everything's kind of settled back into place. It's shot all the way up there, and it just settled back into place. Interesting that it's done that on the ZAR, though. That one might actually cost me money. We'll see how that goes. See how that goes. See if that works or not. I think it's because my account. Yeah, if you get too focused on a loss, it can be difficult. So let's go and have a look at that UCAD trade. Just for example, so if you get yourself, I mean, obviously you were in this trade, and you see it starting to go back up, and you think, "Ooh, I'm going to lose," and then you get out because you're so worried about losing, and then it goes down. But there are times when you should, like for example here, consider getting out early. So I took a small loss here today because I saw this candle running up, and I didn't like it. It looked like it wants to go to the upside, and for me, it said, you know what, time to let it go. Just let it go, because it broke through this level here, and I didn't need to draw it in, but I could see it clearly breaking that level. And once it's broken that level, it's going the other way. So it just said to me, it screamed at me, just let it go. So we let it go. That's the only way to trade it. Okay, guys, it's been a fine Thursday afternoon. And for me, anyway. For you guys, it might be Thursday morning. For you guys, it might be Thursday evening. I don't know where you are in the world and what you're doing. But, you know, these things, yeah, we get those moments. I got 1 to 7 short on UCAD on Monday. I still think there's more room to go. Do you look at Dixie at all? Yes, I do. Not on this platform, on the other platforms, but I don't trade it so much because it just gives you an idea of where the US dollar is going. You don't need to look at it. It just tells you where the market's going, up or down, or whatever the case. I wonder if I've got it on the other platform here. Let's just see quickly. I don't know if this one has actually got it on. I don't think so. It's on my cash account. That's why. I think I've only got Dixie on my cash account, not on these what do you call it, prop firms. So, yeah. But I look at it on that, but I don't trade it. I just look at where it's going, what it's doing, why it's doing it. That's all. I use it to determine whether the dollar's going up or going down. Okay. Yeah. Thursday night, almost midnight. You're going to turn into a pumpkin now, Shane. It's almost midnight. Organox is watching from Scandinavia. So, guys, it's been absolutely lekker. I enjoyed the KR, as he says. It was really good. I enjoyed hanging out with you guys. It's been fun. I'm actually going to head on my way now and do my thing. Don't forget to pop round for tomorrow's video. Tomorrow's video is all about how many trades you should hold and how many trades you should have to make a profit. Interesting little subject that I put out there. Go and watch that video. Don't forget to watch that video. Don't forget to like this video, guys. I always forget to ask. Give me likes, give me comments. It helps the channel. We grow. And let's become bigger than everyone else. Let's grow this community to a giant, massive size and have some fun. It's then I can just rub the noddy badge and say, look at that. Something to achieve. Yeah. Guys, thanks a lot for watching. It's been good having you here. And I hope it's been a great help for you all. It also helps me. It keeps my mind focused as well. And it also helps me to get to know you guys and all the rest of it. But guys, thank you so much. And as I always say, keep your feet on the ground and reach for the sky. And we'll chat soon.